heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, tech charges higher as the Nasdaq is set for its best week of the year. We dig into the AI drivers. That's even as Adobe misses the mark, a muted forecast on AI growth, overshadowing better than expected third quarter results. And Uber, it powers ahead as it expands its partnership with Waymo, bringing autonomous ride-hailing to Austin and Atlanta. But first, let's check in on these markets. I single out what is now the best week for the Nasdaq 100 this year, almost making up for the dire sell-off that we saw last week, and it seems to be chip stocks that drive us higher. Look at that, up 5.8%. So this knee-jerk reaction, risk off, risk on then for the last 5 straight days, really just showing that the market sentiment is trying to get round what the Federal Reserve does, but ultimately what the AI play is from here. Move on to some of the individual movers, because, look, we are seeing one particular drag. The worst performer on the Nasdaq 100 is Adobe. We're seeing it sink some 8%, having a pretty dire day as, once again, its forecast cannot make up for actually a really rather good set of third quarter results. But it guides us towards the fact that its digital media area, the focus on artificial intelligence, just not driving that revenue as many had hoped. We saw 10%, well, 11% growth for the third quarter. But what then of the fiscal fourth quarter? We'll dig into that in a moment. But let's look into what's happening with Uber, because we are driving higher, pardon the pun, up 4.9%. This is all surrounding, of course, a deal that it's making with Waymo. It really wants to be owning autonomous driving. Let's dig into that news, that it will basically be the only app offering driverless rides in Waymo cars in Austin and Atlanta. So good news for this stock. Natalie Lung is with us to break it all down. And Natalie, overall, I am wondering more broadly about, well, what Uber is seeing here. Is it the challenge coming from robo-taxis, the challenge coming from Tesla, or is it something else that drives this?
It could be a combination of all these things, and Uber wants to make early innings into being the platform that people go to, that regular people go to get these get these driverless rides. So that's why they're making partnerships with Waymo, as with Cruise, as well as BYD for ride experiences outside the US. And it wants to be that so-called indispensable partner to all these manufacturers who are looking to put their driverless cars to use.
It's going to bring on board all-electric Jaguar I-Pace vehicles, the Waymo offering. How quickly am I going to be able to get in one at the moment? Where, which cities, how fast will this expand?
Right, so Uber and Waymo currently has a collaboration in Phoenix, so that's happening there now. But starting early next year, Uber will be offering those Waymo rides exclusively in Austin and Atlanta.
It really is a good day for the Uber stock. We're popping. Best day since August the 8th, but up almost 5%. Natalie Lung breaks it down. We appreciate it so much. Meanwhile, Adobe shares doing the opposite, whipsawing to the lower side today after the company reported earnings yesterday after the bell. Outlook really failed to quell investor impatience for new AI tools to start generating cash. Brody Ford pointed us toward it yesterday and is here with the results today. And it does seem to be that digital media side that is letting the side down.
Yeah, well, here's the big question for these software companies that were the big winners over the last decade. Is AI a meaningful new product that'll unlock new revenue? Or is it just kind of like a cool feature that you add in and it's a nice to have, but it doesn't really move the needle? And that's the question that investors have been batting back and forth with Adobe. And what we saw last night is just that incremental revenue they were hoping to see from new AI products at least isn't materializing yet. We have executives talking about we are optimizing for use and adoption rather than really driving monetization on these products yet.
Yeah, what did Shantanu have to say to quell investors' nerves? Because this is a heavy sell-off in the stock, but they seem to be trying to show that, yes, they're driving profitability, they're driving forward in terms of their offerings, but not really speaking to this weakness.
Yeah, their defense, as I read it, and it was a bit of a subtle one, is that AI is still a value add because it keeps folks from going to our competitors. and it allows us to increase prices, right? So it's not that I'm paying an additional $10 for the new AI tools, but it's that, well, I'm not going to go install Canva, and if you raise my prices 10%, I'm not going to cancel, and I'm not going to fight you either. And so they said that it's kind of an indirect monetization story at this point, with more direct monetization to come in the future.
What levers, therefore, can they pull to monetize in the future?
In the future, the idea would be that, generations, say in Photoshop, click here, make a picture of a dog doing a backflip. Every time you do that, you have, let's say, 1,000 credits standard for generations. You go above that, you start getting charged. That's one method. In more resource-intensive models, such as video, which they're working on, they said that could be a whole different monetization mechanism, in part because the compute would probably be so much higher. So in general, credit packs consumption and additional product tiers would be the general way folks would expect and they've spoken about.
One area of focus that we have for Adobe going forward has been the investment that they're having to make as well, the partnerships they're striking, where they're trying. You were on yesterday just talking through how these businesses are trying to delve into the 3D modeling side of things. How expensive is the artificial intelligence offering for them?
The beauty of being a giant company like Adobe, some folks have told me that Adobe's suite of creative tools is one of the most profitable products ever. And so they have a bit of a mountain of cash. And so they're definitely able to train these things and throw some money around without it being too dilutive at this point. So it's a big expense, especially for the startups. We hear about it being it can be even an inhibiting factor. Adobe has really tried to message that, look, we have a diversified business. We are willing to pull some cash over here and put it over here to make sure we're able to keep on doing this and keep getting adoption. And they generally think that they're best set by centralizing users on Adobe and keeping them there by keeping AI accessible for a little longer before jacking up the prices.
Brody Ford, we thank you so much.
Thank you.
Meanwhile, coming up, United Airlines and Elon Musk's Starlink, they joined forces for free Wi-Fi in the sky. More on that next. But going back to, well, database, software offerings and the like, Oracle up 1.7%. This is at a new record high once again. Brody Ford all over this company too, writing that the annual revenue will rise to at least $104 billion in fiscal 2029. That's a pretty optimistic signal on the growth prospects for the software maker's cloud infrastructure business. This is AI again, folks. This is Bloomberg Technology. Let's talk aviation tech right now. Boeing factory workers walked off the job for the first time in 16 years today, halting manufacturing across the plane maker's Seattle hub. This after members of its largest union voted overwhelmingly to reject a contract offer and go on strike. While both parties have expressed a desire to get back to the bargaining table, the move adds to the strain on Boeing. Let's just stick with the airline industry now, because United Airlines has announced a deal with Starlink. The airline is set to offer in-flight Wi-Fi through SpaceX's internet service for free. Bloomberg's Lauren Grush joins us now. Wow, no more $5.99 minimum spends for whenever you get on the plane. What does it say about Starlink's reliability in the air?
Right. I think a lot of people were wondering when, they would strike a big deal with one of the major airlines. And I think what it's showing is that, all right, there were some questions about whether or not it could handle the capacity earlier. But now I think at least one of these airlines says, all right, I think they're ready to handle our fleet of vehicles.
When you say one of these airlines, one of the big carriers in the US, they've already got a deal with Hawaiian Airlines, right? They've got some deals with some
JSX, which is a smaller airline, predominantly based out of Texas. But yes, this is one of the big four, if you will. And so now they finally have, I think, the bragging rights that they need to say, all right, we are here for the big time, the big players. Just look at this deal.
Scott Kirby really talking about how you're going to be able to just walk straight on the plane from the lounge. Right. Everything will be seamless, ultimately. You'll be connected devices, also what you're going to be using on the aircraft itself. What, in terms of market share do analysts think that they're able to get here? Is Scott Kirby the first guy to go and everyone else follows?
I think so. I think a lot of people think this might be like a watershed moment for them, you know, because it's a big advertising get, right? They can say, all right, here we have one of the major players. When are the other ones going to follow suit? And so that's, I think, really the big get for them.
The technology is what we love to hear from you. And ultimately, how hard is this? We all understand how glitchy the airline Wi-Fi is at the moment. Why is that, and what does Starlink offer?
Well, one of the big advantages that Starlink has over its competitors for other internet satellites is that they're closer, right? So the incumbents that a lot of the airlines use satellites that are in much higher orbits. And so there's a latency, there's that lag that I'm sure everybody has been frustrated with on their planes from time to time. But what Starlink offers is their satellites are much closer to the Earth, and so you can have that cut down in latency. Of course, that comes with more satellites in orbit. They need to launch more and more so that they can have that global coverage, because when you're closer to the Earth, the satellites are moving a lot quicker. And so in order to have a satellite overhead at any given time, they just have to keep launching satellites. It's basically a numbers game. But if they are able to have enough satellites in orbit, then you cut down on that latency and it's a more seamless experience.
William Blair analyst Louis De Palma seems to be saying Starlink is now positioned to have the highest aviation market share over the next decade. But he's not saying in the next 2 or 3 years. This takes time, right?
Yeah, it's definitely going to take time. And as we've seen, you know, in terms of where Starlink has excelled, they've really gone up in numbers when it comes to individual subscribers, maritime deals. They're definitely very popular over the ocean, right? Because there's less demand there. But when it comes to the, you know, over land and with the bigger airlines, you know, that's going to take some time. Also, you know, you have to get certain approvals. You have to re-outfit the planes. So it's going to be a slow process, but this is just the first step. And it'll be interesting to see if any of the other airlines follow.
Lauren Grush, what a joy to have you in the studio in New York while she's here traveling. Thank you so much. Been a busy week in space. But elsewhere in transportation, Amazon says it will invest more than $2 billion in its delivery service partner program. It's basically an effort to raise driver pay to a national average of about $22 an hour. Bloomberg's Matt Day reporting across this. Why do it, Matt?
Well, why? The first and kind of obvious context behind this is pressure from labor groups. You know, Amazon's contract delivery drivers are a focus for the Teamsters in particular. They put a big target on Amazon's back, saying we're going after them. Famously, these folks represent UPS and have said they think they can organize Amazon workers. So Amazon playing a little bit of defense here.
Defense. Ultimately, why do they go for contractors to begin with? Why don't they hire their own drivers?
You know, the argument they make is that it's about empowering small businesses. I think labor experts would maybe bat an eye at that. But it is a relatively common model, right? FedEx uses, you know, versions of this. Uber, you know, famously doesn't employ its own folks either. So for Amazon, this gives them, you know, a bit of a best of both worlds, right? They don't have to provide, you know, the perks of employees to these folks directly. You know, while at the same time they can exert a relatively high degree of control over independent, often bespoke contract outfits. How
does it look abroad? Is it this model in the US, same elsewhere, different?
There are versions of it, and obviously, you know, in countries with stricter labor laws, you know, they have to comply with those. The U.S. has fewer of those when it comes to last-mile drivers. But there are versions of it, their delivery service partner program abroad. They say there's something like 390,000 drivers employed by DSPs worldwide, so it's a huge portion of their, you know, kind of workforce that does not accrue to their books.
And let's talk about their books, because I think ultimately this is a business that has been cutting jobs, has been getting leaner and meaner in areas it can, while it splurges an awful lot on artificial intelligence and compute. What does this say, a $2 billion investment? What is that in the context of Amazon's overall spending?
Well, I think it's a reminder that, you know, as people talk about them as a technology company, you know, their core business of getting you things, you know, by delivery is still growing, even if it's slower than it was during the boom years. And it still requires a whole lot of bodies to make it work, right? We're going to see, surely from them, announcements about their seasonal hiring coming up for the fall, for the peak holiday season, something they do every year about this time. So just a reminder, I think, that, you know, listen, while the AI is getting all the headlines, they still are moving a whole lot of stuff and require a lot of partners to make that happen.
Matt Day, all things Amazon, we appreciate it. Thank you so much. Now, coming up, meet the dirtbag of the internet, who happens to be behind the crypto project promoted by Donald Trump. That's next. This is Bloomberg Technology. seeking licenses to start operating in the Middle East. This is the London fintech giant hunts for growth beyond its home market. Now, the firm has submitted applications to the Central Bank of the UAE, reporting shows, to become an electronic money institution and offer remittances in the country. They, of course, the sources currently speaking to Bloomberg, say that the goal is to eventually apply for a full banking license, similar to the one that it recently received from regulators in the UK after years of work. Now, let's stick with the world of fintech, but the crypto side of it. In the last year, Donald Trump has fashioned himself into a friend to the cryptocurrency crowd. He and his two older sons now have been particularly good friends to World Liberty Financial, the crypto project they've been promoting on social media. Here to tell us more about, well, the deal maker behind the project is Bloomberg investigative reporter Zeke Fox. You're also the author of book Number Go Up, Inside Crypto's Wild Rise and Staggering Fall, which is up for a few awards, so congratulations on that, Zeke. You start your story focused on Chase Hero. What can you tell about this guy?
Yeah, so Chase is an unknown in the crypto world, but I dug into his career, and he's been a marijuana dealer. He says he went to prison for that. He sold weight loss colon cleanses online. He had a $149 a month get-rich-quick class. And then now he appears to be the main deal maker behind World Liberty Financial, which is this DeFi startup the Trumps are promoting. And President Trump himself posted a video saying, you know, this is going to challenge the big banks. So it's really bizarre to see that this is the person they're partnering with.
I'm sorry, the guy behind this DeFi project isn't even known in the crypto world.
No, and I mean, he calls himself, in videos, he likes to call himself the dirtbag of the internet. I found in another video, he said regulators should kick people like him out of the industry, and not in those words. He seems to have a very cynical, to say the least, attitude towards crypto. And this project, World Liberty, you know, it might sound kind of impressive if you didn't know about crypto, but it appears to be kind of a copy of an existing project that didn't go anywhere and then lost a lot of money in a hack.
Yeah, you're talking about the Dough project, right? D-O-U-G-H. That seems to be what's got actually industry insiders, the crypto industry, a little worried, is ultimately that the people behind World Liberty Financial have come across from a much smaller project that didn't manage to raise that many funds and actually got hacked.
Yes, and I mean, we don't know the details of World Liberty. I obtained a white paper that lays out some of them, but I'm sure it's all subject to change. But this is supposed to be DeFi, like decentralized finance. The white paper says that 70% of the tokens will be reserved for insiders. So talking to people in crypto, they said this looks like it could be more of a cash grab than an innovative project.
Okay, and therein lies the issue that this could be some sort of cash grab. Some of the details in your story, and that might hint that there's a slight difference in how this DeFi project is run compared to others, is that the people behind the overall project keep, what, 70% of issued tokens? That's a lot.
Yeah, and I mean, like, we're talking about this like I think we're talking about this even a little bit too seriously. Yeah. Like, you should go read what this guy says about crypto. I mean, I can't repeat it. The language is too. This is a family TV channel, I guess. But the way he talks about it doesn't give you any confidence that this is a serious project that's going to challenge big banks.
He says basically you can sell utter rubbish and anyone will buy it in crypto. He happened to say that in a 2018 YouTube video recorded as he drove his Rolls Royce.
Yes, and I mean, I'm digging deep to try and find his crypto resume, and I found that he appeared on influencer Logan Paul's podcast, and during the podcast, the two of them promoted a token called OMI, which I had also never heard of before. Since they promoted it a couple of years ago, it's down 96%. And another YouTuber, a scam-busting YouTuber named CoffeeZilla, posted this expose that appeared to show the two of them coordinating ahead of the show their plan to talk about OMI. I
mean, it seems that someone else listed in the white paper who's responsible as operations lead used to run a service called Date Hotter Girls, where he taught seminars on how to pick up women. all of this just feels like a real risk, ultimately, for the person who is running to be president of the United States again to be associating himself with. Why do it?
I mean, it's pretty bizarre. And the crypto industry, the people I've spoke to from it are not happy about it. They like that Trump has flip-flopped and has endorsed crypto. He said that he's going to fire the head of the SEC and provide looser regulations that he says will make the U.S. the crypto capital of the world. They're like, that all sounds great, but then why are you starting this pretty silly-sounding new venture, a for-profit venture, just before the election? It almost discredits raises questions about his motivations for deregulating the industry.
What has ultimately the World Liberty Financial spokespeople said to you? Have you tried to get in touch? What have they said ultimately about the real underlying necessity of this project?
So I did contact them, and I received an email back from a man who said he was not a spokesperson, but then he spoke for World Liberty and said that he could see where I was going with all these questions, and it was painting an inaccurate portrait of this company, and that time will tell that this is a serious project that's doing cool stuff. And Donald Trump has said he's going to unveil the details on Monday at 8 p.m. on a Twitter Spaces. So I guess we'll see if what he says is consistent with the white paper, or if they've made some changes. I'll certainly be listening.
Whether or not it will indeed move away from the old banks, as former President Trump has discussed. Zeke Fox, we might need to come back to you on Monday. Thank you so much. Extraordinary piece. Meanwhile, some news from a company that used to be associated with crypto, much more in the AI world now, CoreWeave. It's a cloud computing provider now that's among the hottest startups in the artificial intelligence race. And it's in talks to arrange a sale of existing shares, valuing it at, get this, $23 billion, according to sources. The sources say that the company is discussing a transaction that would allow existing shareholders, such as employees, to tender between $400 million and $500 million worth of their holdings. Coming up, we have so much more on AI. In fact, the so-called godmother of artificial intelligence is joining the show. Fei-Fei raising $230 million for her own new startup. What is it doing? Why? And where did she get the funds? That's next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get your check on these markets, because they are higher. And in fact, they've been higher for 5 straight trading days on the Nasdaq 100. We've added more than $1 trillion in market cap. We're up another 0.4%. Maybe the panic of last week becomes the past, and we start to once again factor in maybe a 40% chance, at least, that the Fed could indeed cut rates to the tune of 50 basis points as soon as September. That's what the market is currently trying to digest. We see that reflected in the bond market, the yields just falling on the 2-year yield. I'm saying this because actually equities worldwide are seeing buoyancy from this. Stock 600 over in Europe finishes the trading week also on the higher side, and it adds some 0.75% on the day as we finish trade. Let's move on to some of the individual movers trading here in the United States, at least. Look, chips have been on fire. We've made up so much of last week's real panic selling that we saw. The SOX is currently up 1.4%. In fact, every single name have been trading in the green on the day. And largely, we've got some meteoric moves over the last 5 days. ARM is up some 25%. This, of course, a chip design company that Raymond James is saying they're now rating it an outperform. They see it growth view, particularly when it comes to AI on the edge. And we're looking at Adobe, though, despite managing to live up to expectations in its fiscal third quarter, it's dragged lower. Its forecast not good enough. Where have we heard that before? NVIDIA, Broadcom, and we've heard this a theme in the earnings season, and Adobe once again just not managing to show the generation of revenue from AI, even though they do add generative AI to their offering. Let's just stick with AI now, because AI pioneer Fei-Fei has raised $230 million from a star-studded list of investors for a new AI startup called World Labs, which officially launches today. The company aims to build software that can use images and other data to make decisions about the 3-dimensional world. building what it calls large world models. Here to talk about what exactly that means, and indeed the fundraise, Dr. Fei-Fei alongside Bloomberg's Rachel Mitz. It is wonderful to have you both here. And, well, Dr. Lee, I asked first and foremost, what was it like raising funds as an academic, now entering this private world to be raising money? You've been in private world before, but to raise funds, was it easy from this star-studded list?
Good morning, Caroline. It's really good to be here. Well, nothing is easy, but what's really, really hard is make spatial intelligence happen. I'm just so excited that we brought together a incredible group of Pixel AI talents to work on this really, really hard problem that we now call spatial intelligence.
Explain to us what you mean when you say spatial intelligence, and what is it that you're building exactly?
Yeah, Rachel, well, look, humans have spatial intelligence. It's actually a very ancient ability we have evolved over millions and millions of years. It's the ability to understand, to reason, to generate, and to even interact in the 3D world, right? Whether you're looking at a beautiful flower or trying to touch a butterfly or building a city, all this is part of the capability of spatial intelligence.
We see that with humans and we see that with animals. How do you expect that we'll see that with computers?
Well, that's the problem we're working on. We're already starting to make tremendous progress. The past decade of AI has been pretty exhilarating, and people hear a lot about language recently, but truly in the world of pixels and vision and spatial intelligence, we've been making progress, such as understanding what's in a picture, to be able to tell a story of what's in the picture, to even prompting a sentence and get a 2D image out of it. But what's really the next frontier, which is such a hard problem to crack, is to bring all this into 3D, because the real world is 3D, and humans' spatial intelligence is built upon this very native capability of understanding and working with 3D. So
let's put into real world context that working with 3D. The applications, is it robotics? Is it manufacturing? Is it just us interacting with the real world when we put our AI function glasses on?
You're not wrong, Carolyn. This is such a foundational technology. It's a foundational ability for computers that it has implication in a wide range of use cases. To start with, right, creators. Creators includes not only artists and VFX creators, but also designers, developers, builders. And this technology has a profound implication for them. But in the long arc of this, of course, robotics, manufacturing, AR, VR, this is, there's a reason that Apple calls their Vision Pro spatial computing. Well, in my opinion, spatial computing needs spatial intelligence. So does many other use cases.
Why does spatial computing need VC money, private sector action? What couldn't you achieve in academia?
So this is a whole ecosystem. We've been seeing this in AI. We've been seeing this for years now. And this dates back to any technology that our society, our country is building, right? This ecosystem needs upstream, fundamental, curiosity-driven research, which I have spent many years of my life in, but it also needs very focused drive in industry. We've got great big tech companies working on related problems, but we also, what's beautiful about our ecosystem are startups that has a tall dream, has the ability to call on the believers who believe in cracking such a hard problem, and we come together and focus all of our energy in solving this truly hard problem that needs to be scaled, needs to be productionized, and needs to be delivered in the hands of users and customers.
Dr. Lee, one of the things that you're most well known for is ImageNet, big database of millions of images that really help push forward the field of object recognition in images. I'm curious how your work on that played into your decision to start World Labs. How do you see those two things as related?
Yeah, thanks for asking that question, Rachel. I think they're related in two ways at least. One is that ImageNet is one of the earlier work in the field of computer vision, which is in the pixel space. Granted, in that time, more than 10 years ago, what ImageNet and the derivative algorithms were able to do are still in the 2D space, right? Recognizing objects in photos and eventually telling stories of pictures. But now this is an intellectual continuation of the early work in computer vision. Now we're into the next really difficult chapter, which is spatial intelligence. So intellectually, I feel it's my life's work in continuation. And zooming out one layer, ImageNet was my, more than 15 years ago, it was my intellectual bet on a big North Star problem, a North Star problem that can really change the course of AI. I do believe spatial intelligence is the next North Star for me and for my team, that it will change the course of AI.
One of the things I'm wondering about with the funding for this company is there are a number of big names in AI in particular that invested in this. We've got Jeff Dean and Jeffrey Hinton, Andre Karpathy. Some of them you've worked with previously. I know several of you were at Google at the same time. How did you pitch them on it?
Well, that's the beauty of our field. First of all, these people have been friends and colleagues for years or former students. I think they share my belief. I think they see this as such a big problem. And they believe in my team, that when they hear my co-founders, Ben Mildenhall, Christoph Lassner, Justin Johnson, and really the entire founding team, they recognize that while this is a tough problem, it needs people who really can have the ability and belief to crack this. And I think that's why they supported us.
You've got money from big name VCs as well, Andreessen and Horowitz, to name just one. I'm interested more broadly about the rallying call you've had for money to go towards academia. You went to President Biden himself saying that there needs to be more funding in the public sector as well as the private sector when it comes to AI, R&D. Ultimately, so universities can access GPU and compute. Are you still feeling that necessity that public sector needs money, or have you just sort of given up and gone to the private sector here?
Carolyn, I actually believe even more so now that I'm traversing both the private and the public sector, that seeing the access to compute, access to support in the private sector, I believe none of us will be here in the private sector without the public sector. ImageNet, convolutional neural network, backpropagation, transformer models, many of these seminal work in AI came from public sector first. So I think this ecosystem is so critical, and missing or the imbalance of any component is harmful for the ecosystem. And now I have personal experience to see the access we have to resources. It makes me believe even more that our country needs to invest in our public sector, in academia, in this kind of moonshot mentality to support, students and faculty and researchers in basic science research.
Academics backing you financially, as well as I say, A16Z, NEA, Radical Ventures, as well as many others, and some celebrities in the mix as well. We thank you so much. World Labs co-founder Fei-Fei Li and Bloomberg's Rachel Metz. Appreciate it. Now, let's just talk about elsewhere in AI. OpenAI CEO Sam Altman, NVIDIA CEO Jensen Huang, and other industry leaders have actually just been meeting with senior Biden administration officials at the White House just yesterday, where they discussed steps to address massive infrastructure needs for AI projects. Following the talks, the White House announced an interagency, they're calling it, an interagency task force to help promote data center development in the US and initiatives to support accelerated permitting for those facilities. Coming up, we're going to be joined by Dylan Cox, head of private markets research at PitchBook, for the firm's latest report on private money going into startups, like we've just been talking about. And then we've got Rethink Impact founder and managing partner Jenny Abramson on the firm's latest fundraise. It's a lot. This is Bloomberg Technology. This week, PitchBook released its quarterly private market fundraising report. Not that pretty a reading. Funding was down in the second quarter, with venture capital seeing a 33% drop in fundraising year over year. Let's discuss it all with PitchBook head of private markets research, Dylan Cox. Dylan, we know that it's been hard to raise funds for some. Who particularly is it hard for?
Well, thanks for having me on. Over the last 12 months, our data shows it's been particularly hard for venture investors as well as private real estate funds. On the flip side of things, we've seen some strategies have success, such as private equity secondaries, which provides liquidity to private markets and mitigates the J-curve impact for newer investors, as well as private real assets, which a lot of people don't expect. There's a lot of money right now flowing into infrastructure, kind of along the lines of decarbonization of the economy.
What about, well, data center and digitalization? Are we seeing that in terms of the real asset allocation?
We are. That's another big piece of it. It's decarbonization, it's data centers, but not to be forgotten are sort of traditional infrastructure like roads, bridges, ports, and airports. And then something that also catches a lot of folks by surprise is the sort of slow but steady chugging along of more traditional natural resources in that bucket. Things like oil and gas and timber funds, I think have proved to be a bit more resilient than a lot of investors would have expected maybe 5 or 10 years ago.
Less on our tech theme of things, but important to acknowledge. Dylan, talk to us a little bit about what's happening in VC. What are the funds having to say to former LPs to get them to commit to new funds? Where are we seeing outliers raise big new funds to allocate?
Well, AI is certainly the name of the game, which will, of course, surprise nobody. We're seeing much larger AI-focused funds as well as AI-focused deals right now, many of them, household names at this point. But in terms of the asset class as a whole, I think the single most important issue right now is liquidity. That's distributions back to investors of venture capital funds. Viewed as a proportion of the size of the fund or the assets in the fund, we're reaching sort of decade lows in terms of trailing 12-month distributions, which of course means that investors in those venture funds have fewer dollars on hand to recommit into the next vintage of venture vehicles.
Love that you talk us through the secondaries and the liquidity side of things as well. Dylan Cox, PitchBook head of private markets research. Great to have your take. We're actually going to now pinpoint a complete outlier to the conversation that we've just been having, because Rethink Impact is now one of the largest VC firms dedicated to funding female CEOs, and it's just announced a whopping $250 million fund, its third and largest fundraise to date, nearly doubling the firm's assets under management to more than $500 million. Founder and managing partner Jenny Abramson joins us now. So, Jenny, we were just hearing that it's dire out there for venture, but not for you. Who did you have to come on board? Which LPs are interested?
Well, first of all, thank you for having me on behalf of my partner, Hyde Patel, and the rest of our Rethink Impact team. Yeah, we're very excited to have announced a more than $250 million raise, the largest fund backing female CEOs. And we were fortunate, despite the trends that Dylan shared, to be able to do this in this market. And it was in a large part due to major institutions who came on board to support the fund.
What sort of institutions are willing to almost take what now feels that the pendulum has swung on, a more DEI focus to investing?
Yeah, I think people, major institutions, we had more than 10 university endowments. We had more than 10 major foundations. We had, for example, a hospital and others that really do care about returns, and I think have realized that investing in women and gender lens investing is not just something that feels good, but is actually good business. And so they came on board along with many individuals, self-made billionaires like Sarah Blakely of Spanx and Sneaks, to Melinda French Gates, the major philanthropist, and to many others. And we think the combination of big institutions that I named, a global bank like UBS, Cambridge Associates, their LPs, these kinds of institutions have realized that this is now a mainstream opportunity. We were just looking at some of your previous portfolio from the first fund. The vintage is good. The billions that you've managed to raise, well, these founders have now made themselves valuable at. Guild Education, for example, Spring Health, Elevest. But these companies haven't yet exited, per se, some of them. When do you think that might occur in the first fund? How is the IPO pipeline looking for you? Do these female founders want to go to IPO, or are they looking at M&A opportunities? Yeah, it's a great question. I mean, I think the data has shown that female entrepreneurs do deliver higher revenue, more than twice as much per dollar invested, and tend to exit on average a year faster than their male counterparts. And these companies, like all companies, there's been a slower IPO market, but we invest sometimes as early as a late seed. And so it can take companies typically 8-10 years as well as an open IPO market. Of course, there's also M&A opportunities, PE buys, and others. And so depending on the company, different outcomes will occur. We were just hearing from the people who've jumped on board to commit capital in what I kind of already referenced, of this moment where the pendulum has swung. We are hearing more pushback against funds that focus on women, people of color, minority founders, rather than wanting to embrace them. We've seen the Fearless Fund, for example, actually have legal issues being able to allocate its grants to women of color. Was that anything that you heard of when you were out this summer raising the money? We really mostly heard that people were excited by the opportunity, that investing in women is no longer just a passing trend in the wake of the Me Too movement. And I think this raise makes clear that this is good business, good for the economy, and certainly here to stay. So that's mostly what we heard. Male-founded companies continue to get 98% of investment capital, and almost all of our companies have men and women in the top team. And we think gender-diverse teams outperform. And our goal is to, grow the pie here and grow the economy, which is what we're doing by backing these great female leaders. Oh boy, Jenny, but you say that stat. Just 2% basically of VC money going to female-founded companies. And it isn't changing. And I'm interested as to why you think that is occurring. If you give us all the statistics that they're managing to exit quicker, they're building revenue faster, we're seeing better outcomes. Yeah, I think this is the moment where it's starting to turn. To us, this raise from Rethink Impact that we announced, it really shows that these mainstream investors, these institutional investors, see the opportunity, and that the opportunity between the data and now examples of companies like many that you held up, a company like Spring getting a $3.3 billion valuation last month, and many others, we think that's going to be the turn that leads to capital being more allocated in ways that grow the pie. So we're excited. We think this is that moment that things are going to finally unlock and change that data point that's been stuck for a while. Wow. Heidi Patel and yourself leading this and raising a huge round. Rethink Impact founder and managing partner, Jenny Abramson, we thank you for your time. Now coming up, French AI startup Poolside is in talks for a new round of funding. So many more details ahead. This is Bloomberg Technology. One other VC story that we're watching, AI startup Poolside is in talks for a new round of funding, giving it a valuation of $3 billion. All this before the company even released an initial product. According to sources, the company is set to raise $500 million in new financing, with Bain Capital in talks to lead the investment round. And that does it for this edition of Bloomberg Technology. You do not want to forget our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. Ed will be back with me next week. Have a wonderful weekend. This is Bloomberg Technology.